What's up, people? Welcome back to Invest with T-Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. So this past week is proof that when momentum hits a stock like Neo, it can and will see rapid price appreciation. From the $3.68 low at the close of August to the peak post-earning call of $5.66, NEO surged nearly 54% in 2 weeks. This week alone, the stock is up 10.56%. This, of course, comes on the back of better than expected results during the last earning call, which raises the question, is this rally sustainable? And so, in today's video, I'll go over the key takeaways from the earning call and the new partnership NEO secured. We'll then take a look at the latest analyst ratings. We have an analyst upgrade here to cover, and I'll close with my answer to whether or not this rally can be sustained. Technical indicators here do provide a bit of insight. As always, this is not to be taken as financial advice. I'm not a financial advisor. This is my personal approach to investing and a thought process behind it. I'd recommend watching all the way through so that you don't miss out on anything pertinent I will be sharing. Drop the video a like if you haven't already, and smash that subscribe button. Those are two easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it. Last time we were on the topic of NEO, I told you that the main indicators I would be focused on during the Q2 earnings would be how much margins recovered with the current sales volumes, and secondly, the look-ahead guidance NEO would provide for Q3 and possibly beyond. Well, the results are in, and NEO delivered a beat on expectations. Analysts were anticipating an EPS or earning per share of a 31-cent loss. Instead, NEO reported a better than expected 30-cent loss. A few things to call out that contributed to this outperformance. They reported a total revenue of $2.4 billion. This represents a 98.9% increase on a year-over-year basis. We might as well say that they doubled it. That's crazy to think about. And on a quarter-over-quarter basis, they saw a 76.1% increase. That too is a significant step change. Vehicle margins came in at 12.2%. That's nearly double again the 6.2% number posted about a year ago. And also an improvement over the Q1 2024 number of 9.2%. Net loss came in at $694.4 million. This represents a decrease, in this case, of 16.7% on a year-over-year basis and a 2.7% decrease on a quarter-over-quarter basis. So they're making money and losing less. That's exactly what we needed to see. With 20,176 EVs delivered in August, this makes the fourth month in a row that NEO was able to maintain deliveries over the 20K mark. That's a solid accomplishment and reinforces the idea that NEO can and will continue this positive trend. This is supported, of course, by the strong Q3 guidance they provided for both deliveries and revenue. They expect deliveries to be between 61,000 to 63,000 units, representing an increase of approximately 10 to 13.7% on a year-over-year basis. It would also result in a roughly 6 to 10% increase on a quarter-over-quarter basis. Revenue is projected to come in between $2.6 billion to $2.7 billion, representing an increase of about 0.2 to 3.2% on a year-over-year basis. I gotta say it again, but these results are exactly what we wanted and needed to see. It is further affirmation that NEO has been making the right adjustments and is making the right moves to build back investor confidence. And you gotta keep in mind that the investment into its charging infrastructure across China have been paying off as well, and is driving more consumers and partners back to NEO. In the same way that Tesla built its supercharging network over the past decade and is now seeing virtually most of the manufacturers in North America and parts of Europe partner to gain network access, well, NEO is essentially accomplishing the same exact thing in China. It's a fact that NEO owns and operates one of the largest public charging network across China. They have 2,339 supercharging stations with a total of 10,669 chargers and 1,638 destination charger or level 2 charging stations with 12,613 chargers total. That number is only going to continue to increase, right? And that's the reason the Chariot Group just this week signed a strategic partnership to access the NIO charging network. And if you add Dongfeng, this is the second brand this month alone to join NIO and ultimately add to the growing list of partners they now have. The last major piece of news worth calling out is the Envoy L60 launch event officially scheduled for the next week on September 19th. Deliveries will follow up by the end of the month. The key here is that NIO is expecting to sell a cumulative 20,000 L60s by the end of the year and 10,000 in December alone. That's based on the commentary during the earnings call. Essentially, they expect a quick ramp up to close out the year. The target as they bring on their third factory next year is to get to a point in 2025 where they can sell up to 20,000 L60s in a single month. It's to that end that September so far has seen NIO open over 100 stores across 55 cities in China to ensure that people have maximum exposure to this new brand and can experience the L60 to the fullest. Excitement around NIO continues to build, and it's not surprising to see analysts upgrading NIO as a result. JP Morgan analyst Nick Lay upgraded his rating on NIO from neutral, which is equivalent to hold, to overweight, which is equivalent to a buy. He also raised his price target from $5.30 to now $8. The main reason being, and I quote, "With the stock price having year to date and hence expectations low, we believe NIO may well exhibit a relief rebound beyond year end, driven by financial and operational turnaround." End of quote. In so many words, he believed the stock has bottomed out. Between the execution year to date and the forward guidance, along with expectations for performance in 2025, as the Envoy brand ramps up the L60 along with new model introductions, there is plenty, he believes, that will contribute to the turnaround in stock price performance supported by the fundamentals. And so now, looking at the bigger picture, the overall consensus rating, we have a moderate buy made up of 11 rating. The breakdown is as follows. We have 6 buy ratings versus 5 prior. We have 4 hold ratings, no changes here, and still the 1 sell rating. The high end of the range sits at $8, courtesy of Nick Lay. The low end remains unchanged at $4 even. The average price target now comes in at $5.97, which we are quickly approaching. That's only another 7.57% upside from the current level. It will be interesting to see how the rest of the analyst pool covering NIO re-rates the stock, if they do, over the coming weeks, especially now that the earning results are behind us. How well the Envoy L60 is received post-launch event could also play into that. This then brings us back full circle to the question at the start of this video: can the rally continue? There has been solid enthusiasm around NIO for the past couple of weeks, and for just cause, the company is firing on all cylinders and delivering on exactly what they said they would coming into 2024. That said, looking at the technical indicators would suggest that we have moved up a bit too quickly. I mean, look at the move right here. It looks like a space needle. We've punched right through not just the 50-day moving average, but also went right past the 200-day moving average, which currently sits at $5.40. RSI currently comes in at 68.86, which basically means that the stock is pretty much overbought at this point. Now, keep in mind that next week we have what could be one of the most consequential decisions at the macro level, right? The Fed will conclude its FOMC meeting on Wednesday, September 18th, and announce whether or not this is the start of the long-awaited rate cuts. Looking at technical indicators alone, one could conclude that where we are is a good spot to start consolidating to allow RSI to come back towards the middle of the channel. However, should the Fed enact the very first rate cut on Wednesday, it's not unthinkable that the rally could extend farther as the broader market moves up on the news. So the bottom line, and really the last thing that I will say, is this: market sentiment is finally starting to catch up to give credit to NIO's execution. The rally, though it may pause briefly, I think has room to move higher, especially if the first rate cut goes into effect this week. I would say, though, do not expect a return to a double-digit stock price just yet, so $10 I would say is out of the question, but we could revisit the $7 mark before taking a break or retracing a bit to start the next consolidation phase above $5. Either way, we have a big week ahead in markets ahead of us. But on that note, that is it for me today. If you found value in my content, click the like button and share with others who you think could also benefit from it. And if you feel so inclined, use the thanks button at the bottom of the screen. For my newcomers, subscribe. It's free. And don't forget to ring the notification bell so that you too can stay in the know. I'll be back on Sunday for my weekly video and possibly during the week for an extra one. Till then, you can keep up with me here on X for crypto and NFT related news. Thank you for watching. Stay humble, hustle hard, and I'll see you in the next one.